Hello friends, welcome to Pro Investor YouTube channel. And today we'll see how the US markets have reacted on the last Friday to the labor data. And from the charts you can see that Nasdaq has closed 1.22 percentage above than its closing, and it is up 290 points. And similarly, the Dow Jones has also given a positive closing with 0.8 percentage of upside. Seeing this trend in the US market reaction to the labor data, we can expect a positive opening of our Indian markets. So this is a stock market, anything can happen, and if you get some value from this video, hit the like button and subscribe to the channel to keep updated about the new videos that I post. So let's get started and discuss a few of the stocks in the Indian market which are at a buying level, and in the few coming days if there is a bit of fall you can average down, or if you have not bought any of these quantities then you can initiate a new buying. So first in the list is our favorite stock, VBL. This is a company which has given a 10 times return in the last 5 years. And so can we expect in the future? In my opinion, this kind of upside was due to this Sting beverage. So you might not see this uptrend now. There is a bit of consolidation going on, but yes, as compared to other large caps, it can give the same returns, and you can expect around 20 to 25 percentage of annualized CAGR returns there. So how should we keep our buying strategy? So this current market price of 578 is something midway between the support of 550 and the resistance of 680. Uh, and You can initiate your fresh buying at 550 levels, 550. And when it goes further, 2 to 3% down, 5% down, you can average it down. So if the Q3 number comes to be better than expected, it can show an upside of around 25-20%, and it can go up to 680. So positional traders can look at this stock. Next in the list is Asian Paints. So the crude has jumped 4 percentage from its bottom. It has reached around $80 per barrel. And yes, Asian Paint buys crude and paint because crude oil is the raw material, crude derivatives is the raw material for paint products that we get, and it can hit us margin if the oil prices go up. Hence, there is a profit booking from the resistance. But I don't expect this 2700 and 2600 level to be broken by this stock. Yeah, I don't expect it to really come to 2800, but yes, even if the Israel, Iran, and Lebanon tension keeps intensifying, then we cannot say if the crude might go up from this side. A crude at a $70 per barrel is sustainable, and the company's stock also give a good momentum in that price. But whenever it reaches upside, there is a profit booking from the companies who use crude as a raw material, food products as raw material as well. So you can keep an eye on this stock. If it comes down, then it's a lifetime opportunity for us, because we might not be able to buy this at 2800 and 2700 prices. Yes, you can keep an eye on it, and you can add it to your watch list. This is an all-time favorite for the investors who wants to buy this at the bulk. Let's wait for it to come below 2800, below 2700, then you can get a good return on this. The next company in the list is SRF, and this is a very company, a large cap in the chemical sector, and a consistent compounder. This is also seeing a downside momentum because there was import duty on its product in US, and yes, the stock reacted to it, and later it also got the upside from there. But yes, there is a recent profit booking in this global tension time, and if it falls below 2175, 2150, yes, you cannot do a bottom fishing, and you will not be able to buy it at 2000 levels. If you just wish to commit below that and wait for it, yes, it is well and good, but you can start buying it from 2100 hundreds of level. So what I do is I keep buying from 3 to 4% above the resistance. Yes, I would get 2 to 3% of less returns there, but yes, if I don't miss the opportunity. So it's up to you. What strategy do you use? Next in our list is Bergen Paints. Again, a company from the paint sector. Yes, and it has also shown a profit booking from its upper levels, and you can see that it is consolidating from the 2021 level. And yes, it is like this price of 574 was in the month of December 2020. So from last 4 years, if you had bought at the highest levels, then there is no return for investors. So what should be our buying strategy? As a pro investor, what the channel's name suggests, we have to buy it at the support, and yes, if you wish, you can sell it at the resistance. Otherwise, you can keep it for a long term, and this depends on the stock that we are holding. Yes, and keep updated. Do like, subscribe, and share the video with your friends and family so that they can also be a pro investor just like you. So what should be our strategy here? Yes, and due to the crude oil prices going up in the market, you can expect the paint sector companies to fall below to the support levels. Yes, although I do not expect it to come below to 460 and 450 levels because of this festive season. And yes, it might get reversal in between somewhere there. Yes, and if it comes below to the support to 560, 570 levels, you can buy this particular stock. And yes, Merchant Paint is a company which is smaller than Asian Paint, and yes, obviously you will get a more return here in this Merchant Paint company. Both are very robust, and yes, they are have a good management, reliable management. And yes, one fun fact about, not fun fact, it is a fact about Asian Paint, that from every 3 year it doubles its profit. Yes, and the stock rises, but in the near term, in the last 2 to 3 years, it is not able to match up with its past performance. Yes, and you'd be surprised to know that it got its first supercomputer so that it can use the data to stock the particular paint in its warehouses, which has a demand, and to cut on inventory losses and product expiries. So yes, the Asian Paint Company uses technology, uses efficiency in management to tackle and keep up a healthy margin and healthy revenue growth. So this is all for today, guys. Let's meet in the next video.